Good day everyone, welcome back to my channel, and if you're new, please click subscribe and press the notification bell for more updates. Today, we're going to discuss how to close journal entries in 4 steps. First, let us define closing entries. Closing entries are journal entries that are made at the end of an accounting period to transfer balance from a temporary account to a permanent account. So our goal here is to make the balances of our temporary accounts zero and transfer them to the balances of our permanent accounts. Let's have a recap of our temporary accounts and permanent accounts. For temporary accounts, we have the income and expense accounts. So the balances of these accounts must be forwarded to our permanent accounts, specifically to our capital or equity accounts. Permanent accounts are composed of assets, liabilities, capital, and equity accounts. So these are the steps in closing entries. Step number 1. Close the income accounts. For purposes of illustration, let's have the pre-closing trial balance of ABC Company as of December 31, 2019. So the balance of our service income is 80,000 credit. So to close it, we need to debit it. Our closing journal entry will be debit service income 80,000, credit income summary 80,000. Step number 2. Close the expense accounts. For ABC Company, the following expenses are depicted on its trial balance. We have rent expense 15,000, insurance expense 10,000, and interest expense 3,000. These expenses have debit balances. So to close it, we need to credit them. Our closing journal entry will be debit income summary 28,000, credit rent expense 15,000, credit insurance expense 10,000, and also we have to credit interest expense 3,000. Now let's proceed to step number 3. Step number 3. Close the income summary account. So the balance of our income summary account will be the difference of our income and expenses accounts. In this case, we have the balance for service income 80,000 less the total of our expenses, which is 28,000. So the resulting figure of our net income will be 52,000. To close our income summary account, our closing journal entry will be debit income summary account 52,000 and credit ABC Capital 52,000. Notice that our net income increases our ABC Capital by 52,000. This is because of our income or net income. Step number 4. Close the withdrawal account. So in our pre-closing trial balance of ABC Company, ABC withdrawals accounts to 15,000. So our closing journal entry will be debit ABC Capital 15,000 and credit ABC withdrawals 15,000. Now let's have the post-closing trial balance after we have posted our closing journal entries. Now spot the difference of our pre-closing trial balance to our post-closing trial balance. What have you observed? In our pre-closing trial balance, all the elements of our financial statements, that is from assets, liabilities, equity or capital accounts, income, and expense accounts, are all listed. On the other hand, in our post-closing trial balance, only the permanent accounts remained. We have the assets, liabilities, and equity accounts. Furthermore, in our pre-closing trial balance, our income and expenses are not yet closed to our income summary account. On the other hand, in our post-closing trial balance, the balances of the nominal accounts or temporary accounts are already closed to our ABC capital, which amounts to 97,000. Now let's review the steps in closing entries. Step number 1. Close the income accounts. Step number 2. Close the expense accounts. Step number 3. Close the income summary account. And step number 4. Close the withdrawals account. After posting the necessary closing entries, we can already prepare the post-closing trial balance. Take note that in our post-closing trial balance, only the permanent accounts remain, which are the assets, liabilities, and our capital accounts. I hope you learned something today.